Welcome back, Kenny. So, Hong Kong had to weather considerably challenging things in 2019. We had the trade war, we had protests, we had China's slowing economy, and yet the Hang Seng ended up 9%. What should traders be thinking about for the coming year?
We're still positive on Hong Kong stocks, and our target for Hang Seng Index will be 30,000. And one key driver will be is attractive valuations. In terms of P/E ratio, that is price to earning ratio, Hang Seng Index currently trading around 11 times, which is relatively low compared with the historical figures, or looks cheap compared with US and Asia's. So we're still positive, but there are a lot of uncertainties we need to pay attention to, say, you name it, trade war, economic situation in China, especially inflation. We are expecting 5% CPI in January. So if the CPI or inflation do not gradually slow down as are expected in Q2, there may be some volatility to the market. But generally speaking, we still think that the Hang Seng Index will have further upside in 2020.
Some sectors did especially well.
Yeah.
One was pharmaceuticals. We saw some incredible gains by Sino Biopharmaceutical and CSPC Pharmaceutical Group. They were in big stars.
Yeah.
Will those go up again next year? And what about the sector overall?
I think so. We're still positive on the pharmaceutical sectors because we are living in a low growth environment. So investors will still focus on those sectors which can deliver handsome corporate earnings, which we think pharmaceutical will be one of them. We are looking for those related stocks can deliver 20% or 30% earning growth in 2020. So we still like these sectors. But bear in mind, in 2019, we do see very high volatility in this sector driven by policy risk. So my suggestion is you can try to buy on dips. So whenever those pharmaceutical stocks have some correction, you should go into it, but rather than not to chase on the rally.
December was a great month.
Yes.
It ended up 7%. Can you talk about whether there are any bargains left out there, or if people bought the ones that were too low priced?
This is a very challenging question, but my answer is yes, we can still find it, because in December we do observe a very interesting phenomenon. That is, investors are chasing those underperformed stocks, but on the other hand, those outperformed stocks, say education, property and management, as well as what you mentioned, the pharmaceutical, they do have a volatility and do have some mild correction. So we think that if you were a midterm or long-term investor, you should feel happy for those short-term correction or consolidation, and you can get into it and you can have a handsome profit in mid to long term. So we still think that, for example, education, we can still find some undervalued stocks in Hong Kong market.
So in terms of advice to investors in 2020, any thoughts?
Yeah, one evergreen strategy for me is buy on dips and don't chase the rally. It's forever true, especially for 2020. We still think there are some uncertainties, just like we mentioned, the trade war, China economic situation. So buy on dips can enhance the risk and reward ratio. And also, being a fundamental analyst, I will always suggest investors focus on fundamental factors, but not driven by the market sentiment. So in summary, if you focus on fundamental factors and buy on dips, I think in 2020 you still can enjoy a fruitful result in Hong Kong investment markets.
Great. Thanks for joining us, Kenny.
Thank you.